All right, what's going on, my fellow wealth creators? Matty Ice here. In this video, I want to talk about some specific things to consider if you're trying to determine whether or not dividend-paying whole life insurance is right for you. And I want to share the journey that I went through, the questions I asked, the paradigm shifts that I had, the shifts in mindset and the way I think and understand money, think about money and understand it, just to help you along your own journey, right? Because dividend-paying whole life insurance, while I'm a huge fan of it, and I think it's incredibly powerful for establishing a really strong financial foundation. It's in our lives, it's an incredibly efficient savings vehicle. We're not comparing this to investments, okay? Because we can actually do both. We can have dividend-paying whole life insurance as our foundation, and then we can use that policy to build wealth like we normally would, which is something I do on a regular basis. I'll link that down below if you want to learn more about how I'm using these policies. But with that said, I know it's not a good fit for everyone. It really just comes down to your current financial situation. What are your goals? What are your beliefs as well around money? Very important. So just want to share a few things with you guys here. So number one, I want to get kind of what I think is the obvious one out of the way here really quick. Because here's the thing. At the time of this recording, interest rates are still high. They're not as high. They're starting to cut. The Fed's starting to cut interest rates, but we've had high interest rates for a little while, which means that high yield savings accounts have become popular again. I put my money into a high yield savings account at my local credit union when interest rates started going up. I started buying a bunch of T-bills as well. So here's what I would say is if you got excited about high yield savings accounts, earning 4 to 5%, same thing with treasury bills, then dividend paying whole life insurance might actually be a really good fit for you because number one, we get so many more benefits than just the rate of return in our policies. We'll talk about that in a minute. But also these policies, when you custom design them, they typically net 3 to 5% tax-free, uninterrupted tax-free compound growth for the life of the policy. Like you can't say that about a high yield savings account or treasury bill, but it gets right around the same amount of internal rate of return that these other like high yield savings accounts would get. So if you're excited about the high yield savings account and the interest rate you're getting there, well, whole life should definitely be something to at least consider, because despite what the mainstream financial media says about these things being horrible investments and getting a terrible rate of return, when you custom design them, they're as far as the internal rate of return goes, it's the equivalent of a high yield savings account. So I don't really know what they're talking about other than just pushing their own narrative. But the fact is that these policies can net right around what a high yield savings account would do. Now, I want to stress that's not why we set up the policies. Okay, we're going to get rich off of 4%. It's not a sexy rate of return. I do push back on that a little bit, because 4% uninterrupted tax-free compound growth for decades can turn into a pretty decent amount of money, but that's not why we're setting up the policy, right? And obviously everybody's different as far as when they're setting these up. So are you able to give that compound curve enough time to work? Maybe not. But anyways, if you got excited about high yield savings accounts, whole life, definitely something to at least consider, because you can custom design them to get right around the same internal rate of return. All right, here's another thing. This more comes down to beliefs, values, principles, I guess. If you don't trust Wall Street, the big banks, I can't stand Wall Street and the financial system in general, government, things like that. It's all designed to extract as much wealth from us as possible. It's really sad to see on such a regular basis. But I don't know about you, I don't trust big banks, right? As I started going down this rabbit hole and I started educating myself about the history of Wall Street and the history of big banks, man, it's not pretty. They don't have a very good resume of being a safe place to store money. And I got to this point where I was not very comfortable having a lot of money, like my emergency and opportunity money, sitting in the banking system. And so as I started to learn more about the strength and stability of these mutually owned life insurance companies where we set up these whole life policies with, as I started to learn about their strength and stability financially, it started to become kind of a no-brainer, especially since I would still have access to the money. When I set up my policies, I had access to about 90% of my cash value within the first 30 days. I took my first policy loan within 2 weeks. So when you hear from mainstream financial media say you don't have access to your money for 2, 3, 4 years, whatever, they're talking about traditional whole life policies. They're not talking about they're only telling half the story. They're not talking about the ability to custom design these policies for what we want, what we need, high cash value in this example, right? So as I started to put the pieces of the puzzle together, I'm like, why do I have all this money sitting in the banking system? It's not doing anything. In fact, it's working against me a lot of the time. If your money's sitting in a checking or savings account, what is that doing? The only thing it does for you is provide liquidity, because you can withdraw from an ATM, you can write a check, you got the debit card, so you have liquidity, but it's actually working against you because of inflation. All you're doing by having money sitting in the bank with these big banks is you're making the bank rich, right? Because they're lending that money out multiple times, right? So why not take back control of our money with these types of policies where we can get that uninterrupted tax-free compound growth for the life of the policy, plus all the additional benefits that we'll talk about here in a minute. But as I studied the history of the banking system, I was like, I don't want anything to do with this. These guys are not trustworthy. I mean, if you think about it, how many banks have failed over the last 120 years? Thousands and thousands of banks. Now ask the question, how many mutually owned life insurance companies have failed over the same time frame? You're going to be hard pressed to find them. Every once in a while, do they? Sure, nothing's perfect. But these companies are the best risk management companies in the world because they're not chasing all of the stupid crap that Wall Street does, right? And so there's a lot more stability, a lot more safety. And, these companies have paid dividends to their policyholders for 120 years straight, 146 years straight. That means throughout the Great Depression, when thousands of banks were failing and people were losing billions of dollars in savings, mutually owned life insurance companies paid dividends to their policyholders. Through both world wars, savings and loan crisis, 2008 great financial crisis, the pandemic, all paid dividends. How many banks failed throughout all those different time periods? Good for me. I think that's a good question to ask if we're talking about where to safely store our emergency and opportunity capital. So just something to think about. That's more like from a values, principles, philosophy standpoint. Here's another reason number 3 would be to consider, or that dividend paying whole life insurance might be a good fit for you, is if you want your dollars to do multiple jobs. So again, going back to the savings and checking account, like just having money saved there. Now, I applaud anybody that's able to save money. That's great. But here's the question that I propose. If you're going to save money, why not save it in the most efficient way possible? Because again, in the checking and savings account, what is it actually doing for you other than just providing liquidity? Nothing. It's working against you because of inflation. So with these dividend paying whole life insurance policies, we're getting multiple benefits. Our dollars are doing multiple jobs. Let's think about it. So like I mentioned, we get the uninterrupted tax-free compound growth for the life of the policy. So those are multiple benefits right there. We're getting a safe, decent internal rate of return, nothing crazy, nothing like you're going to get maybe in the stock market. But again, this is a savings vehicle. We're not comparing it to investments. Sorry, I got the light coming through here. It's good timing. Anyways. All right. So we have safe internal rate of return, that of a high yield savings account. We have the tax advantages. So our cash value is going to grow tax deferred. We can access it tax free, assuming that we set it up right, we use it right. All right. We have the safety, getting it outside of the banking system a little bit, right? We have liquidity in the form of policy loans. So we can put our money into these policies and then access it to build wealth like we normally would, or cover an emergency, right? We just request the policy loan. You get it in 2 to 3 business days. You can even set up a cash value line of credit with these policies as well, get instant access to it. You write checks on it. You get a debit card, etc. We also have the death benefit, guys. This is so overlooked because people are so focused on internal rate of return and cash value, which are important, but we forget about the massive benefit of the death benefit itself, where our loved ones are financially protected if something were to happen to us. That's a massive income tax-free death benefit that gets paid to our loved ones, our beneficiaries. Like, you can't put a price on that. And also the living benefits. If we were to get diagnosed with a chronic, critical, terminal illness, we can access a large portion of the death benefit to get additional care that maybe health insurance doesn't cover. So it gives us more control over our medical directive if something were to happen to us. Again, it's one of those things I think is just really priceless. So we're getting all these benefits from one policy. So our dollars are doing multiple jobs versus one or two in a checking or savings account, right? So very efficient savings vehicle. Another way to determine if dividend paying whole life insurance might be a good fit for you is if you're good at saving money and you just want a safer, a more efficient way to save or place to save that money. I kind of alluded to this a little bit earlier. Then dividend paying whole life insurance can be a really good fit for you because these things make excellent emergency and opportunity funds, in my opinion, anyways. Because again, we have liquidity, access to the majority of our money within the first 30 days. So if an emergency does take place, it happens, life happens sometimes, or there's an investment opportunity that we want to take advantage of. I'm personally a big fan of doing real estate with these policies. I'm not a big fan of tax qualified plans and the stock market and stuff like that. I'm not saying anything's wrong with those things. It's just not in alignment with my investor DNA or profile, I guess you would call it, right? So I like utilizing my policy to take advantage of real estate investments, private money lending, turnkey rental real estate, etc. I talk about that more in the description and other trainings. But yeah, it's just a much more efficient way to save money for emergencies and opportunities, guys. All right. Let's see what else. Also, so another reason, if you regularly need capital, all right. So I'm going to talk to my business owners here for a minute because this is phenomenal for business owners. Business owners typically need access to financing capital for a variety of different reasons. And unfortunately, I've seen a lot of business owners go down the dark path of stacking multiple merchant cash advances and getting really high interest financing and stuff like that. And I suppose in an emergency situation, you do what you have to do, but that can put a lot of strain on the business. And again, assuming that you're able to save money because you have to fund these policies correctly. You don't have to dump tons of money into it, but you do need to fund them correctly. All right. If you want to see an example of that, I'll link down to the training I did about how I funded my policy. All right. But if you're able to fund these policies correctly, you're basically setting up your own banking system to where when you need capital, you can borrow against the policy. Now, this doesn't replace traditional financing options 100%, but it's giving you more options. It's giving you more flexibility. And I would argue more protection as well. Because again, our dollars are doing multiple jobs. It's not just a source of capital. You're getting all these other benefits that we already talked about. Okay. But specifically talking about financing, here's a couple of things to consider, especially right now with interest rates being much higher. Financing options have become much more expensive, maybe more difficult to get. So with these dividend paying whole life insurance policies, there's no application process. It doesn't matter what your credit score is. It doesn't matter how much your business made last year, last 2 years, last month, nothing. There's no application process. You literally call up the company or log into your online dashboard, tell the company how much you need, and it's in your account 2 to 3 business days. And like I mentioned, you could set up a cash value line of credit with these policies as well and get instant access if you wanted to, right? So very, very streamlined process. It doesn't take weeks to get approved. You don't even need to get approved. It's just tell us how much you want and it's in your accounts, right? So very, very easy access to capital. Here's the other thing, interest rate protection. Like I was saying earlier, you're probably experiencing this right now. I mean, I see it all the time. Interest rates on some of these financing options really, really expensive, especially if you don't have a great credit score. Maybe you're making money, but your credit score isn't great, or maybe your cash flow fluctuates quite a bit, right? So that's going to potentially increase your interest rate. Well, interest rates on these policy loans are really good right now, comparatively speaking. Every company is a little bit different, but you're looking at between 5.5% to 7%. I think that's pretty good for no application process, and your money's continuing to grow in the policy while you use the money in your business. And then the final benefit that I'll talk about here is that you're in control of paying back the policy loan. It's an unstructured loan because it's already collateralized by your death benefit. So the life insurance company is not going to call you up if you're 30 days late on there's no minimum payment. All right. They're not going to call you up and say, hey, you need to pay us or else, maybe you lose your capital. There's late penalties or some type of fees that you get from traditional financing. And, that can, again, put a lot of strain, a lot of stress on the business. That's not the case with these dividend paying whole life insurance policies. because again, those policy loans are collateralized by the death benefit already. So if there are a couple of months where your cash flow is fluctuating or it's down and you're struggling, you don't have to worry about a bank calling you up, hitting you with a ton of penalties and fees and potentially seizing your collateral, whatever, right? Potentially ruining your credit as well. Like there's a lot of consequences to falling behind, unfortunately. You don't have to worry about that with these policies. So I just think it's a phenomenal option to consider for business owners that regularly need capital. And finally, guys, I would say also, if you consider yourself to be your greatest asset, then dividend paying whole life insurance could be a really good fit. Again, at least something to consider. This was a big paradigm shift for me as I was going down this rabbit hole, because I started to realize like we put so much faith in financial products to solve our problems and to make us wealthy. And it's certainly part of the process. They definitely have their place. But if we're completely relying on these financial products to make us rich and achieve our financial goals, then a lot of the times I think we're going to be sadly disappointed. And we're going to suffer the consequences of that, versus when we recognize that we are our greatest asset and ability to build wealth, that changes things completely. Like we're the ones that generate the income, that put our money that we make into these various different products and accounts based off of our financial education, the research that we've done. And then we deploy capital in this opportunity, that opportunity, whatever. That's us. It's not a specific financial product that's doing any of that. We're utilizing financial products in a very specific way to accelerate the wealth building process. But at the end of the day, we are our greatest asset. And if you believe that, like I do, then dividend paying whole life insurance can be great, because it really empowers you to be your greatest asset, because it gives us such a strong financial foundation. Peace of mind. So, like I sleep really good at night knowing that the majority of my emergency and opportunity money is with these, with the best risk management companies in the world, these mutually owned life insurance companies. My money's growing. I'm able to access that money and deploy it into various different opportunities like private money lending. That's one of my favorite ways to build wealth right now. And yeah, it really empowers me to be my greatest asset to the next level, I would say. So anyways, those are just a few reasons that dividend paying whole life insurance might be a good fit for you. Just some things to think about. Hopefully give you some clarity there. If you guys have any questions or feedback, drop them down in the comment section below. Would love to hear your thoughts about this. And also make sure you check out all the links in the description as well. I have tons of additional tools, training, resources about infinite banking, dividend paying whole life insurance, private money lending, all that stuff. Just sharing my wealth building journey that I think would be very useful to you. All right, so make sure you take advantage of that. Hope you guys are crushing it, and I will talk to you in the next one. To your success, Matty Ice is out.